high inflation and rising cost of living, it is becoming more and more difficult for the younger generation to achieve financial security. Don't say the younger generation lah, our generation is also getting difficult already. That is why as a good parent, you want to start investing early for your kids to give them the head start that they need in life. In this video, I'll be sharing the top 5 ways that you can invest for your kid, not crypto of course. Also, do join my Telegram group to discuss personal finance or ask any questions that you may have. First up, recurring investment plan. Okay, it sounds quite cheap, but it's actually just scheduling the broker to automatically invest into your investments periodically. The benefit of using this strategy is that you are basically just doing dollar cost averaging, where if the investment goes up, you buy less, and if the investment goes down, you cry a bit, then you buy more. So over time, the price that you'll be paying for all your investments would be averaged out. I won't talk too much about what you can invest in, since it is highly dependent on your risk tolerance and how long you'll be investing for. But if you prefer to invest in US stocks, you can check out S&P 500 ETFs such as VOO or CSPX. Or if you prefer to invest in Singapore stocks, you can check out the Straits Times Index ETF. Quick pause. Momo Singapore has finally launched regular savings plan for US stocks. This means you are now able to automate your investments. This allows you to dollar cost average into US stocks, thus making sure you are consistently investing on a regular basis while minimizing the impact of bad market timing. To set up regular savings plan, just open up the stock that you want to invest in, tap on the 3 dots on the bottom right, then tap RSP. Here, you are able to invest with as little as $10. After that, you can choose to automatically invest every trading day all the way to every month. Another way to create RSP is by going to Markets, tap on US, then RSP, where you are able to choose the stocks that you want to dollar cost average in. Momo Singapore also provides you with a RSP calculator to showcase the potential return. For example, if you were to RSP every month into Nvidia in 2023, you will have enjoyed a 61% return. Right now, Momo Singapore is offering some very generous promotions. You will first get to enjoy a 6.8% per annum guaranteed returns for up to 31 days on your first $60,000 invested with Momo Cash Plus. Besides that, they are also offering the new Fullerton SGD T+0 fund, where it's the first retail SGD cash fund that has enhanced intraday liquidity. Please note that Momo Cash Plus is an investment product. This is not comparable and is different from savings deposits. Principal is not guaranteed, and up to 31 days of 6.8% per annum is guaranteed only during promotional period. Investment in any capital market products involves risk and the risk to lose principal. On top of that, you will be able to unlock up to 4 stock bundles of the top 5 traded US stocks worth $70 each and an Apple share worth $260, plus up to $20 cash coupon exclusive rewards when you sign up using my link. So that is $900 worth of welcome rewards in total. Holding period and buy trades applies. Besides the welcome promo, if you complete 3 successful buy trades via RSP with a minimum of $100 per trade, you will also receive $6 worth of cash coupons. This is applicable to both new and existing users. So if you are interested in taking your investments to the next level, do try out Momo Singapore. For more details of the promotions, please refer to the link promotion page in the description below. And with that being said, let's get back to the video. Next, besides doing recurring investments via brokers, you can also do recurring investments via Robo Advisors. The benefits of using Robo Advisors is that it provides you with ready-made portfolios based on your risk profile, which means that you don't have to spend time doing research and choose your own investments. Plus, they will also help to manage your portfolio from time to time. As to which is the best Robo Advisor to go for, there's no way to know for sure. That's also the reason why I'm currently running a Robo Advisor experiment to see which Robo Advisor can give the highest return. So instead of choosing the Robo Advisor based on which may give higher returns, you can instead choose based on other criteria. For example, if you prefer Robo Advisors that let you invest with a small amount, Save and Stash Away do not have a minimum investment amount requirement. Or if you are looking for the lowest fees, you can check out Endowment, which fees range from 0.6% all the way down to 0.25%, depending on how much you are investing. Or if you are looking for a robo-advisor that has some really unique rebalancing algorithm, UOB AM Invest has something called the Glide Path solution, where it will rebalance your portfolio to adjust the risk level based on your risk profile and investment horizon. However, the one thing to consider before going into robo-advisors is that the fees are higher than investing through brokers, since robo-advisors charge recurring fees and the fees may vary depending on the portfolio size. Next, endowment plans are a popular choice for those who are looking to invest for their kids, while at the same time, adding a portion of protection with it. That's because with education costs having increased by 76% over the past 20 years and are expected to rise even further, endowment plans provide a low-risk way to save and grow your money for your kids. To illustrate how an education endowment plan works, let us look at the Tokyo Marine TM Kickstart 2. Let's say you opt for a monthly premium of $394.35 and a premium term of 15 years. The total premium that you will have to pay is $70,983. Then, when your child starts university, you will receive guaranteed payouts of 20K, 22.5K, and 25K over 3 years. And in the third year, assuming the plan gives a 4.25% per annum return, there's also a graduation benefit of $25,331, giving you a total payout of $92,831. At the same time, if at any time your kid develops specific medical conditions such as autism, severe asthma, or leukemia, future premiums for the basic plan will then be waived. Some examples of child education endowment plans that are available in the market right now are Etika Enrich Flex Plus, Manulife Ready Builder, China Taiping iSaver 8, and Tokyo Marine TM Kickstart. Not sponsored, of course. Go speak to your financial advisor to find out more. Moving on, another way that you can invest for your kids is by topping up their CPF accounts. If your child is born on 26 August 2012 or later, their CPF accounts would have been created at birth, and the government will automatically top up some money into the MediSave account. To access it, you can log in to your CPF website, click on My CPF, then Child, and here you'll be able to see your child's CPF account. Your child can then receive CPF contributions at any age, which will allow them to enjoy a compounded risk-free interest rate of between 2.5 and 5% per annum. And best of all, the returns are guaranteed by the government. As to which CPF accounts you should top up to, I feel that MA would be the best choice since the funds in MA can be used for the healthcare expenses such as paying for MediShield Life or a private integrated shield plan, hospital bills, and vaccinations. Meanwhile, the funds in SA can't be accessed until they become OAPET or OAMA. Fun fact, you can also make your child a CPF millionaire just by contributing $64,350 into their CPF SA or MA at birth. Then, with the magic of compounding, the money will grow into $1 million when your child retires 65 years later. Though probably by that time, $1 million may not be worth that much anymore lah. However, before you do any CPF top-ups, you need to understand that the downside of this method is that the money will be stuck in CPF for a very long time, and there's no tax benefit for topping up your kids' CPF. That's why it's best to invest the money using the other methods that I've mentioned just now. And if you still have any extra money after that, only then you can look into the CPF top-up method. Last but not least, Singapore Savings Bonds. SSBs are issued by the Singapore government every month. The way SSB works is that every year, its interest would slowly go up, and the longer you stay invested for, the higher the average return. As of making this video, the latest SSB is giving about 2.9% 10-year average interest. Because SSB is backed by the Singapore government, it is considered a super safe investment, and SSBs do not require a huge commitment since you can invest with as little as $500 all the way to a maximum investment amount of $200,000. Another advantage of investing into SSBs is that the funds are liquid and you can withdraw anytime from the investment without penalty and get back your money in the following month. This is good in the event you need the money for something else. However, take note that it's only good to invest into SSBs when interest rates are high, like right now. So do take advantage of the high rates before they go back down, yeah? So those are some of the ways that you can invest for your kids. But which should you go for? If you prefer to choose your own investments and want to customize your own portfolio, you can consider the recurring investment plan. With that, you get to decide on the types of investments that you want as well as the market that you want to invest in. However, if you do not have the time to monitor the markets and prefer to leave the job to experts, then robo-advisor may be more suitable, though the fees will be higher. Then if you want guaranteed payouts, forced savings, and some form of protection, then you can check out endowment plans. Or if you prefer something that is more liquid and provides guaranteed returns, now is a good time to invest into SSPs, given that interest rates are high now. And finally, if you want guaranteed returns of up to 5%, you may consider topping up your child's CPF, though take note that the funds may not be as liquid as the other options. So these are some of the different ways that you can invest for your kids. But do comment down below and let me know, what other ways do you know of? Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.